Do you know what most people get wrong about acquisitions? They think that deals are found somewhere on a website, in a listing, or through a lucky broker. They picture a hidden opportunity just waiting to be discovered. But the truth is, the best deals aren't found. They're built. They take shape quietly long before anyone knows that they exist. Because an off-market acquisition advantage doesn't come from luck or speed. It comes from preparation, from the data you collect, from the signals you read, from the conversations you start months before a company ever decides to sell. That's where the real deal flow begins, not by chasing opportunities, but by engineering them. The best acquirers don't wait for deals to surface. They identify patterns, they make contact first, and they design outcomes on their own terms. And that's not luck. That's the science of buying what others will never even see. And that's the difference between paying market price and defining it. Because when you control discovery, you control everything that follows. Valuation, leverage, and structure all bend around your timing. Every true advantage, price, structure, leverage, it starts in how information is found, framed, and filtered. That's the foundation of this phase of the advanced laws of acquisition. Deal sourcing, the architecture of discovery. Now, this isn't about chasing deals. It's about designing inevitability, building a repeatable system that makes opportunity predictable, measurable, and precise. And it all begins with Pillar 1, the statistics of invisibility. Now, let's start with macro reality. In the United States, there are more than 32 million private businesses. Roughly 6 million generate over $1 million in annual revenue. But here's the truth that no one mentions. Fewer than 2% of them ever go through a brokered sale. Now that means 98% of potential acquisitions never appear on a listing. They're invisible. Yet, every week, thousands of buyers chase the same public opportunities. They're scrolling identical databases. They're calling the same brokers. They're competing in the same crowded auctions. They're all fishing in a puddle while ignoring the ocean. Bain & Company's 2024 private equity report quantified that mistake. Competitive auctions inflate valuations by 30 to 40% above intrinsic value. Off-market acquisitions, by contrast, close 28% faster with lower leverage ratios and higher post-close retention. So the visible market isn't just smaller, it's more expensive, it's slower and riskier. And that's why elite acquirers don't chase what's public, they build what's proprietary. Because in private markets, visibility kills advantage and information creates it. Real information, early information, actionable information, every acquisition that truly outperforms starts here in the invisible 98%. This is where discovery becomes design and where ownership quietly begins. Pillar 2, precision over volume. Deal sourcing isn't about activity, it's about architecture. The first step is defining the buy box, a quantified operational definition of your perfect target. It's not a wish list, a command structure, industry vertical, revenue and EBITDA range, margin profile, customer concentration thresholds, capital intensity, geography, succession criteria, regulatory limits. Once all that's defined, it becomes code, a filter applied across millions of businesses. McKinsey's 2023 M&A operating model survey found that acquirers with a codified sourcing thesis achieved 2.1 times higher conversion from lead to signed LOI than opportunistic buyers. Precision, not persistence, drives probability. Amateurs chase volume. Professionals design precision. Pillar 3, mapping the universe. The modern sourcing process begins with two stages, mapping and ranking. Mapping builds the universe, drawing from registries, industry databases, UCC filings, and state-level data. Ranking builds the FIT algorithm, a model that scores companies across 7 weighted variables: economic fit, stability of cash flow, owner tenure, industry cyclicality, geography, talent debt, and transition probability. Each variable is scored from 0 to 100. 80 and above, that's tier A. 65 to 79 is tier B. And below 65, archive. The goal isn't to find what's for sale, it's to find what's inevitable. Pillar 4, reading the signal stack. In off-market acquisition, timing is everything, but readiness doesn't announce itself, it leaves traces. Elite sourcing teams monitor what we call the succession signal stack. That's a set of measurable behavioral tells. Like in corporate, there's officer resignations, entity conversions, and lien releases. In legal, it's new counsel hired, quiet IP transfers. In operational, it's new controller postings, hiring pauses. With digital, it's site inactivity, ad spend declined, and domain expirations. In financial, it's bridge loans repaid and new credit lines. And with human, it's founders reconnecting with advisors or bankers. McKinsey's Private Markets Index shows that companies displaying 3 or more of these indicators are 6.4 times more likely to enter a sell process within 12 months. And each signal alone is just noise, but 3 together, they tell a story. And story quantified becomes edge. Pillar 5, the human graph. Every company is a network of relationships, and the secret to sourcing isn't just data, it's accessibility. According to Harvard's negotiation project, first contact through a trusted adjacency like a lawyer, accountant, or an industry peer, that increases engagement by 42% and cuts negotiation time in half. And that's why we build the Founder Map, a relational diagram that identifies the owner, their number 2, their trusted gatekeeper, and every secondary path of approach. By the time contact is made, the terrain is already mapped. There's no cold call. It's just only choreography at this point. Pillar 6, intelligence and integrity. Data gives access. Ethics sustains access. The most sophisticated acquirers use only publicly observable data, corporate filings, digital signals, behavioral patterns. Anything requiring breach of confidentiality destroys trust before the first conversation. Every deal starts a relationship, it doesn't end one. The edge isn't secrecy, it's comprehension. Seeing patterns before others do, ethically and transparently. And that's how professionals build reputational gravity, and gravity compounds faster than deal flow. Pillar 7, cadence and control. Consistency beats intensity. High-performing teams operate in sourcing sprints, measured, repeatable, data-driven. Each week, hundreds of companies scored, dozens enriched with new data, 5 move forward for direct engagement. CapIQ and Axial's 2023 benchmark report confirms it. Structured sourcing cadences achieve 2.3 times higher conversion from opportunity to first meeting, because predictability compounds faster than enthusiasm, and consistency is the strategy. Pillar 8, the 5 dossiers. At the end of each sourcing cycle, we review 5 dossiers. Each includes fit assessment, transition probability, human path, risk analysis, value hypothesis, opening angle, red flags. If any are weak, it doesn't advance. Precision means no maybes. This process builds more than pipeline. It builds institutional memory. Each pass sharpens the next cycle. Pillar 9, strategic output. The outcome of sourcing isn't a list. It's a map of inevitability. It's a ranked universe of companies that you understand better than their founders do. And by the time outreach begins, you already know why this company, why now, and how to approach. Searching finds what's visible. Sourcing defines what's possible. Pillar 10, the operator's mindset. Professionals think in probabilities, not possibilities. They don't chase deals. They build systems that makes deals chase them. Information asymmetry is the last true advantage, but it's earned, not guessed. When sourcing becomes predictable, negotiation becomes leverage, because control begins upstream with whoever defines the environment where opportunity exists. Pillar 11, the compound effect. Once the sourcing engine is in place, it compounds. Every closed deal refines the model. Every rejection sharpens the filter. Every data set strengthens prediction. Over time, sourcing evolves from discovery to forecasting. And that's when deal flow stops depending on luck and starts behaving like gravity. Pillar 12, the doctrine of silence. Most buyers think that the deal begins with a number. Professionals know it begins with a name on a page that no one else has seen because they built the map, not followed it. Phase 1 is where ownership begins. It's where the invisible becomes visible and the improbable becomes inevitable. Because this is the first law of compounding acquisition. Information creates gravity, and gravity pulls opportunity toward those who understand its structure. Every great deal begins in silence, not with luck, but with design. This is where theory ends and precision begins. Deal Founders, it doesn't teach frameworks. We replace the entire acquisition infrastructure end to end, from signal detection and sourcing architecture to due diligence, capital engineering, negotiation, and post-close control. Every variable, data, structure, financing, and leverage is pre-engineered before you ever make a call. Over the past 3.5 years, our clients have closed more than $1.8 billion in acquisitions across over 700 transactions, each one sourced, structured, and executed through this same system. And behind them stands an advisory board representing more than $20 billion in global deal experience. The same intelligence now deployed for every qualified client that we accept. Deal Founders is not for the curious. It's for serious entrepreneurs, acquisition-minded professionals, and investors who are ready to own, not explore. So if you're currently building someone else's wealth, or you're already operating your own company, or actively deploying capital but lack the engine behind you, you're in the right room. We didn't build Deal Founders to educate you. We built it to give you an unfair acquisition advantage end to end. So go to dealfounders.com and submit your acquisition application. And if accepted, we'll execute beside you, not behind you. There's no speculation, no delay, no theory, only precision, execution, ownership. Apply only if you're ready to acquire, not just think about it, because this isn't education, it's controlled inevitability, engineered for those qualified to handle it. This is Deal Founders, the art of deal making.